everyone. Um, Prior Cashman has been around now for over 50 years. Our DNA is entertainment, but we have a broad restaurant, food, and beverage practice, which is also part of our hospitality practice, which is both transactional and litigation. Those of you who know us, welcome. Those of you who don't know us, welcome. Those of you who do know me know that our restaurant, food, and beverage clients and our hospitality clients, your success is our success in normal times. Your accolades are our accolades, be it Michelin stars or New York Times reviews or James Beard Awards. But in this time, your pain is our pain. There's a blues song that goes, when things go wrong for you, it hurts me too. Well, that's where we are. I want to welcome the New York City Hospitality Alliance, who I'm hoping is also participating on the call and it's been kind enough to promote this web discussion. This web discussion was born out of my firm's attempt to address our restaurant and hospitality clients' needs in this time. They help navigate through governmental laws and rules and bureaucracy in normal times. And the purpose of this call is to specifically focus on business interruption insurance. Although I think that's a misnomer. I think what we're talking about now is life interruption insurance. Because it's you folks on the call, the restaurateurs, the food, the beverage, the hospitality people who frankly make life worth living. And Chris Lauber, I am thrilled to introduce momentarily, is the head of our insurance practice. And I know that many of your brokers have told you that there are exclusions in your policies, but I'm going to let Chris address what may be able to be done in that regard. I'll just keep it short and turn it over to Chris. I just wanted to say yesterday, for example, I was watching my stocks plummet on CNBC, which is usually what I spend my time doing these days. But that wasn't as heartbreaking as when one of our clients, who I hope is also on the call, Nikki Russ Fetterman of Russ and Daughters, if anyone knows Russ and Daughters, here in New York. It's a 100-year-old, fourth generation appetizer. And they've lived through 9/11, they've lived through Sandy. Nikki even said that her ancestors lived through the Spanish influenza. Well, this is the first time that Russ and Daughters was forced to close its doors and lay off or furlough employees. So to me, this is absolutely heartbreaking. So again, we're here to help. We'll give you information at the end of the call on how we can specifically help each of you. I hope that Chris will answer a lot of your questions as they pertain to insurance. I just wanted to mention, I'm very proud of the fact that one of our other clients in Los Angeles, we have a California office and a Miami office, but one of our advertising agency clients in Los Angeles, you may have heard about this. If you haven't, I want to mention it, conceived of and launched the Great American Takeout. The Great American Takeout is a grassroots movement. Doesn't cost anything to join. It's all word of mouth, where periodically, they've done 2 of them so far. It just encourages everyone, consumers and restaurateurs, to promote takeout, which at this point is the lifeblood, I know, of many of our restaurant clients. So without further ado, I'll pass it off to Chris Lauber, the head of our insurance practice, to specifically address, hopefully, your questions about business interruption insurance. Thank you.
Yeah. Hi, everybody. I apologize for that. It's like technical difficulties here. But we do appreciate everybody being on the line. The way we're going to try to do this, and I think Mike probably already indicated, we have a number of people here. This is not intended to do a specific deep dive into any one issue or any one policy. But what we're going to do is try to do an overview of what's going on in the world right now in a way that's going to be helpful to everyone. So what I'd like to do is start by just giving some of the basics of the insurance policies that are triggered here. I want to give the kind of lines that we're hearing from the insurance industry, how we think they're going to respond to this. And what we want to do is we want to give you practical advice to give you some comfort. It's obviously a very difficult time, and we want to be able to answer questions in a general way. So the starting point is this. There are two basic types of insurance that could respond to COVID-19. And one type is actually probably more relevant for this conversation, and that's your property policies, your business interruption coverage. The second type of policies could be your liability policies. That's where someone might later on claim that we somehow caused damage to their person or to their property as a result of not protecting them from the virus. But for right now, what we're going to be talking about is just the first one. And the type of property policy that's fairly common, and again, you all may have individual policies, but the type that's fairly common, it takes two basic coverages. One is property damage for your physical property. The other is business interruption losses. Now, both of them require, in most cases, will require direct physical loss or damage in order to be triggered. And one question that comes up then is, okay, does the virus count as direct physical loss or damage? What if you didn't have it in your restaurant or your facility? And if that's the case, then can you assert that you have been damaged by it? If you know that there have been cases of infection, either employees or customers, then that would be a different analysis. And what you would do is you would say, yes, we were directly impacted because this is an incredibly contagious disease. And if we know that people were in the restaurant or the premises, then there is a very good chance that it was in fact a damage, whether the spore landed on a countertop or a doorknob or something like that. So the first question is there direct physical loss or damage as a result of the virus? Our position on this is yes, there is nothing in these policies that we have seen that says microscopic damage does not qualify as damage. Very easy when you talk about a more traditional loss. When you talk about something like a hurricane loss or a wildfire loss, something like that. Much easier to look at that and say, well, okay, we can prove that there's physical damage because you can look at the destroyed property. The insurance company is going to first push back on that, and many of you may have seen that happening already. There are efforts underway to say, well, this isn't really the type of thing that would constitute physical damage. That's one issue that we're seeing. The second question, after you address the question of whether or not there is physical damage caused by the virus, what we're seeing is many policies have exclusions to coverage. And the exclusions that we're seeing would come in different forms. Sometimes there are blanket exclusions that say we do not cover anything that's related in any way to a virus or bacteria. Some of you may be seeing that in your policies. The second type is a little more subtle, and that's where there will be a definition of pollution in your policy that includes the word virus as a pollutant, and then there will be broad exclusions based on pollution. What effectively the insurance company would try to argue is, well, yes, we would like to help you, but we can't help you because you have this pollution exclusion in your property. Okay. So the next question that everybody asks is, okay, well, what if I have those? What if I have those exclusions? What do I do about that? Right? How do I go in and argue around that? And there are two important things to realize. And the one is, oftentimes, when we have situations like this, there are regulatory actions that are going on behind the scenes. And here, we actually have that right now. And some of you may be aware that there are at least 4 states that have introduced legislation that is attempting to override these virus exclusions. So what they're trying to do is say, okay, we're gonna override these exclusions because it is wrong for the industry to come in and say, with these massive losses, that in any way the insurance industry can come in and deny the coverage. Now, those there are slight differences, but the way it works is insurance is developed on a state-by-state basis. There's no insurance federal law. It's developed state by state. It means that the states can regulate themselves. But said that, there are a lot of commonalities when it comes to different states that carries over. When the states take action like New Jersey, New York, Massachusetts, and Ohio are doing right now, many other states follow. Now, in addition to the state actions, there are efforts underway in Congress to try to encourage the industry to take some action to protect all business owners. Most of the state actions are focused on businesses that are under 100 employees. The broader implication of this is that if there are states that will allow you to argue that you have that coverage, if there are states that are going to come in and say, yes, you must provide this coverage, insurance industry, then the insurance industry could be forced to do that all around the country. Okay? Many of the policies that you have may have something called a liberalization clause, and the liberalization clause basically says, well, you are entitled to any broader coverage that becomes available as a result of changes that are made during the time when your policy is in. What we are encouraging people to do, and we're hearing all kinds of different advice here. Some of the advice is that we are not tendering claims. So some people are getting advice from their carriers or from their brokers to say, well, you don't have coverage, so don't submit claims. The problem with that is that there are requirements in all of your policies that say if you have a claim or you're aware of consequences or circumstances that could give rise to a claim, then you need to tender that to your insurance carrier right away. The insurance carriers have in the policies a defense of late notice, which means if you don't give them prompt notice of the claim, then what will happen is if you come in at a later date and you try to make a claim, they'll say, no, now it's too late. And the reason this is significant is because these developments that we're looking at, the developments that are occurring on the state level, perhaps the federal level, are going to take place over the next weeks and months. And there may not be clarity for a while, but if you don't tender a claim now, then what happens is you're going to stand on the sidelines as things develop. If you then later decide, hey, we can jump in here, we can do this, we're gonna try to make a claim, then the insurance carriers are going to say, no, it's too late. You could have done this back in March when things became aware, April when things were really heating up, but you waited until November, December, whenever to bring a claim, and therefore we're not going to allow you. Okay? So the overriding advice right now is to make a claim, put a claim in. Many folks that we're speaking with have already made claims. The wording of those claims is very important. The way that the claims are phrased, and I will give you just an example, and then I'm going to talk about another related issue, which is the public statements, PR statements, press statements, things like that. And the way in which a claim is tendered can make the difference. Many folks have asked us, well, what is the best way to put a claim in if we were shut down, not because we had direct damage, but rather because the municipality shut us down, the state shut us down. And the answer there is you could tender a claim and say we had to close because the state of New York or the city of New York told us that we had to close. There's another way to phrase that. The other way, and the better way, is to say, as a result of COVID-19 and in keeping with the directives of states, cities, etc., we were forced to close down. The first statement says that we did it voluntarily. We haven't really been affected by the disease. That plays into an insurance carrier's argument that there was no direct damage and therefore there would be no coverage under the policy. The second way of phrasing it leaves open your ability to do the investigation at a time when the dust settles a bit and we can see what happened, and it preserves the ability to argue, yes, in fact, we were damaged. We have that direct impact that would trigger the coverage. So what we're advising on that front is to tender in general terms. If you have already tendered and you've gotten a response, some people are finding that the insurance industry is reacting very quickly. They're sending back immediate responses. And those responses, in some cases, are not really even addressing the particular policies that our clients have. They're just sending out blanket denials. And if you are in that situation, what you can do is you can address that. There are ways to retender, tender differently, more specifically. And if you haven't tendered, then the idea is that you would tender in a general way that would preserve these rights.
Chris, can you just repeat? Again, these are general, broad strokes, but the words people should be using. Can you just repeat that for the crowd? Sure.
So what we're recommending is that there's not, and each situation is different. But in broad strokes, what we're recommending is that the tender of the claim does not say, we shut down because the government told us to shut down. What we are trying to do is instead say, we shut down as a result of COVID-19 and in keeping with the directives of you fill in the blank depending on where you are. Gotcha. Does that answer the question?
I think that's great. Yeah, thank you.
Okay. So one more thing that I want to talk about is the public statements that we're making, and obviously it's a very, very smart thing to do to go to your customers, go to the public, and say, hey, we're shutting down because we're doing the right thing here. We're shutting down because we want to keep everyone safe. That's very smart. And the reaction, the immediate reaction is also to say, we weren't affected, it's okay, we're going to get back up and running. We have, very little impact here.
Chris, I'm sorry. Chris?
Yeah.
I'm sorry. I think we had some technical difficulties there for a second. Can you repeat, you were talking about how, while it's a smart move to say, hey, we haven't been interrupted in terms of a press statement, and then we lost you for a second there. So if you could just, well, it seems like a smart idea to go ahead with a release.
Right, of course. So what we're talking about is with the common reaction is to try to downplay the impact. And if we do that, if we say in our statements to the public, if we hang signs on the door of our establishment and say, yes, it's not there's no problem, we haven't had the impact here. What we are setting up is a potential defense for the insurance carrier, because it's often there's often a lapse between when you first make a claim and when you are actually running through and putting together the losses that you have sustained. And so if we say early on that there is no impact here, if we're asserting that we have had minimal impact from the disease, and then later on it becomes clear that we actually have sustained quite a substantial business interruption and that we have substantial damages, then it's a situation the insurance company is going to come back and wave that statement in our face and say, no, look, you said you didn't have any impact. You said you were fine. So there's no reason why we have to cover you. Does that make sense, Mike? Does that answer the question?
I think that's great. Yeah, thank you very much. I think you're addressing a lot of the questions we're seeing. So this is great.
So I guess overall, what we're trying to do, and again, what might be helpful is to just step back 1 second too and talk about the manner in which things happen. And oftentimes people will get a little nervous and maybe they'll act promptly or hastily and start saying things about what's happening and putting claims into their insurance carriers without kind of thinking through these different issues. The role of insurance counsel here is to help guide through that process. And one of the benefits is that there is a legal privilege that attaches, so that if you have the opportunity, and again, many of the folks on this call are our clients. We would be happy to work with anyone. You do not have to hire us. It's not a business pitch. This is really just to help people and let them know what they should be doing. The advice that we do have, though, is if you don't hire us, please hire another insurance coverage lawyer, because that person's job is to be your advocate. That person's job is to represent you against the insurance carriers, what undoubtedly will be knee-jerk denials and then further denials down the road. And that's not to say anything bad about the insurance industry or about brokers. It's just a reality. The industry is facing hundreds of billions of dollars in losses here, and they will be handling things on a less than personal basis. And that's why some of you may have gotten letters where they cite provisions in your policy that don't exist in your policy. And that's one. So the idea is you want to make sure that you have an advocate that's on your side. The other benefit of it is that you can absolutely count on that lawyer keeping what you say as privileged. Any communications between you and your attorneys is privileged. Any communications you have with your insurance broker is not. And therefore, anything that your broker says, anything that your broker would say to you about what they think about coverage or what you think about coverage, if there are communications like that, then the issue is going to be that the carrier is going to get access to that, and they're going to be able to know that you either have concerns about your own coverage or your broker has told you there's no coverage, and that's something that they would unfortunately use against you.
Great. Should we be moving to the question piece now, Chris, or did you have other?
Let me just say one more thing, and that is that there are other issues here as well. Of course, what we're talking about today is only the specific insurance-related issues. There are other issues that relate to employment, and there are other issues that relate to leases. There are other personnel issues, privacy issues. I'm not, and I kind of joke about this. My partners don't want me to talk about that because that's a little outside of my area. But the truth is that there are other things that should be considered here. And
thanks, Chris. So we do have a slew of questions coming in. I'll try to aggregate them as best as possible. Again, not to overly disclaimer people, but specific situations will call for specific advice. Again, we're doing this with a broad stroke. Some great questions, though. Chris, how does staying open for deliveries affect your claim? Is that a good thing? Is it a bad thing?
No, actually, that's a good thing, and that's a really good question. One of the things that every insurance policy has is an obligation on the part of the policyholder to actually, and hold on one second because I might be able to join you all now. Okay, and I'll continue to talk while we do this, and again, I do apologize here. But the idea is that the policies do have an obligation that you mitigate your losses. And so it would actually count as a mitigation that you're staying open, you're doing everything possible to keep those losses as low as they can be. Alternatively, what would happen is the insurance company would say, well, geez, you just sat back and did nothing. And when you sit back and do nothing, you are basically relying on us.
To answer that last question, was that yes, we want to continue to stay open. We want to operate as much as we can so we can mitigate. Is that coming through clearly? Okay. So I think that answered that first question. Is there a second question?
Can management fees be considered in the forgivable side of PPP loans as salaries, commissions, etc.?
Okay, that I have to honestly say that is a question that would depend on the underlying documents more than the insurance policy. So that one I would have to defer to some of our other partners.
Yep. Okay. Is it possible that a group of restaurants could file a class action suit instead of individual restaurants? By coming together, is there a benefit? How does that work?
Right. That's actually a really good question as well. So class action suits are difficult in this context for well, there are a couple of reasons. Everybody is not dealing with the same insurance policy. Everybody is not dealing with the same carrier, and they're not dealing with the same provisions. And so it really is an individual situation because the facts of your loss and the terms of your policy are really going to dictate here what claims you have and the pathways to that coverage. To follow through on the thought, class actions are more appropriate in situations where you have a group of people who were injured by the same product, suffered the same type of injury at the same time. Think about an airbag recall, for example, right? Something like that, a malfunctioning product. That allows itself for more of a common class of people. Here we're dealing with different losses and different policies that underlie those losses.
Okay. What if you had a delivery, you were open for delivery, and yet that was causing more of a loss, kind of than a standard staying open? You're actually losing money, a little more. Can you walk through that?
In other words, if you are not mitigating your losses, but you're building your losses by staying open, I guess that's the question.
Yeah.
Yeah, I mean, I guess that's interesting, and that too is a good question, because on the one hand, you may, for your business continuity purposes, need to stay open so that you can show the public, yes, we're here and we're still surviving and we'll be here to take care of you. And if you're at the same time losing money, obviously that wouldn't be a mitigation in the financial sense. But I think there we would argue, and again, it would depend upon the specific terms of your policy. we would be arguing that, yes, that is the business interruption losses to which you would be entitled, right? That the difference between what you would be earning in profits if there were no change and if there were no COVID and the current situation.
We have a couple folks who are, in the process of launching restaurants. Is that kind of the same thing? Do the same rules apply? You do have business interruption, obviously, because, you're delayed. Can you elaborate on folks who may not have been open yet or were closed for renovations or?
Right. So that may be a different type of policy. I mean, there are oftentimes policies that are issued when a new facility is there's risk. Policies, there could be, sometimes they call them construction control insurance or contractor controlled insurance programs, owner controlled insurance programs. That would really be one I think we would have to answer on a one-off basis when we could see the coverage that was in place. But what we're talking about here, and again, I do apologize because we're trying to stay very, very general. But with regard to the general response, that would likely not be covered under your business interruption in the traditional sense, because that aligns more with the ongoing operations.
Mm-hmm.
Now, let me actually, and if I can, Mike, before we go on to the next question, it might be helpful. Some information about different aspects of their policy. So in addition to the general, we talked about the property damage part, which is the physical loss. And then we talked about this interruption, but it's important that there are buckets of potential coverage. And this one in particular that I want to talk about first is a little bit confusing for people. And so I just want to talk about it and let them know, what the basics are. It's called civil authority coverage. And people may be hearing this, they may be reading about it. And that does say that if a civil authority, meaning a state or local or federal government, shuts down an area in which you're operating, that you may be entitled to business interruption coverage for that. Now, I think people automatically assume that means they have coverage because clearly that's what's happening all over the country. Unfortunately, when you read the civil authority provisions, they too require that you have direct physical loss or damage. And with the direct physical loss or damage, it gets us back to that question we talked about in the beginning, which is, does this virus qualify? Again, there are different pathways to argue for that coverage. The insurance carriers are going to be arguing that no, in no event do you have coverage even for civil authority shutdown, because that is a direct result of the virus. And then they will double back on potential exclusions and say, we think that those exclusions kick in. So in addition to civil authority coverage, there's a broad bucket of coverage under most policies. It's called extra expense. And the extra expense is interesting because that will allow you to recover anything that you spend over and above your normal expenditures to get you back up and running, get you back up to normal operations. Again, there's often, usually actually going to be a direct physical loss or damage requirement there, which is going to raise the same issues that we've been talking about. So that's why I started with the virus. I started with the direct physical loss and damage. That's going to be something that we're going to be focusing very closely on. And that's why it's so important that giving these tenders, even for folks who may already have tendered, to re-tender and say, just to be clear, we want to make sure that you understand that we were directly impacted by this loss and that we are making a claim on that basis. So I didn't mean to run away from that question there. I think we had answered it, but I think it's pretty important because those are really key. Those are the really key questions.
Yeah, Chris, you talk about kind of your key takeaways. One is, getting an advocate on your team. The second one is, making a claim now. Can you elaborate a little bit on the time frame that you think people have to do it? You definitely don't want to be last to market, but can you elaborate on, when's that time? How long is that runway?
Right. So what I started to say was the policies will require that we give that notification as soon as we become aware of circumstances. It used to be in the state of New York, for example, that there was a law on the books that said, or this case law that said, if you don't give your insurance carrier prompt notice of an event that could give rise to a loss, and if you don't do it promptly, then that insurance carrier can use that as a flat out basis to deny your claim. Fortunately, that was changed by legislation actually a couple of years ago. But it used to be that if you waited so much as 2 or 3 weeks, that the insurance company could say that they didn't have to pay your claim. It's not like that anymore. But what we do want to do, because things are rapidly changing here, is we do want people to start tendering these claims just so they can drive a stake in the ground of their current policies. Everybody's policies expire at a different time, and everybody's policies have different provisions in them. But most, I'm confident, are going to say, yeah, you have to tell us, as soon as practicable is usually the word they use, so whatever that means, right? But if you're aware of it, it's best to put it in now, and it's best to put it in a general way so that you can develop the facts as you become aware of them.
Mm-hmm. And I got another question in here. Some folks will have different coverages. Someone has a BI, business interruption. Someone else has an umbrella policy. What's the process? Do you kind of claim one or another, or how does that all work in terms of having sort of multiple coverages, one of which maybe could work and one which
right
not?
Right. No, great. Great question. What we're looking at is if you have more than one policy that would respond to your property damage, and very often people do. Larger clients will have a tower of coverage that will consist of a primary policy that's at the base level, and then there will be layered excess policies above that. And in those situations, we tender under every policy, because you don't want a carrier to come back later on and say, well, we'd love to help you, but we're not going to now because you didn't tender quickly enough. And you didn't tender when you gave the notice to everybody else. Now, there's a second part to that answer, though, and it's something I talked about at the very top, and that is that there are different types of policies that could respond. Right now, what we're looking at is the property policies, because they're the ones that we think are most likely to immediately respond. If it does turn out down the road that we have claims by third parties saying, oh, I was exposed to the disease in your restaurant, or if there is a claim against a directors and officers policy, for example, where they say, well, you have mismanaged your business and you didn't take proper precautions, then those would be policies that could be triggered rather by those specific claims. But right now, and certainly if people have those claims right now, we should address them. But most clients, I think, at this point are going to be looking at the property damage and the business interruption piece first, because that's what we're dealing with right now.
Yeah. One last question here. We're cognizant of keeping it on time, and again, we wholly encourage folks to reach out, and we'll talk about that. How about if you have a worker? These folks are sort of required. You're making them come in. If one gets infected as a result of coming into work, can you walk through some of that?
I can talk about that from an insurance perspective,
Yep.
But again, that would be one of those areas in which I would defer to our lawyers, to some of the other folks on our overall COVID team, because it really goes beyond just insurance. From the insurance perspective, that would be the type. Right, that's right, exactly. The labor and employment folks would be good ones to talk about this. From the insurance perspective, though, that's the type of claim that would potentially trigger a what's called a third-party policy, your liability policies, how you're liable to other people for damages that you cause. So if people are facing that, then yes, they should look very closely at whatever coverage they have. And see what policies should be noticed other than just the property.
Great. Well, thank you very much. Very pragmatic takeaways and some great questions from folks. Again, want to keep the conversation going. Rich, I'm going to send it over to you. Any additional comments or thoughts from your perspective?
Well, first of all, thank you all for attending. As Mike and Chris just said, we're advising all of our restaurant, food, beverage, hospitality clients on a myriad of issues, employment, labor. Someone raised the question about restaurant management agreements, which is separate and apart from leases, which we're also, of course, working out with a lot of our restaurant clients, landlords, abatements and deferrals. So we're available for all of that, in particular insurance, of course, and wanted to encourage you to reach out to one of us, and the right person can look at your particular situation. We just formed a charitable organization this morning for one of our major restaurant clients because they wanted to form a 501c3 to the benefit of their employees. So we're here for you. We feel for you. And obviously, our website, Chris or I, or even Mike Mellor, the greatest marketing guy. So please feel free to reach out to us. Reach out to the, if you're members of the New York City Hospitality Alliance, reach out to them and they can direct you to us. So again, we wish you all the best. Please take advantage of the Great American Takeout for those of you who are delivering. Chris, any final comments? Oh, I had a question for you, Chris. If someone's already filed a claim and the insurance company has not responded, is there still an opportunity to, as you say, based on this teleconference, modify the initial claim to position it in a way that could be helpful?
Yeah, that is a good question, and the answer is yes. And I would say that even if you've gotten a denial from your carrier, even if you have a letter back in hand that says, "Hey, we're not covering you," that's something we could look at, because the way it works, and this is pretty standard, that the claim is tendered, the insurance company will write back, and normally they say, "Okay, we've gotten your claim, and we now are going to assign somebody to that, and they'll be in touch with you." That's happening for many of our clients. Many other clients are getting just these boilerplate letters back, right, saying that hey, there's no coverage here. So even if you've gotten one of those letters, you can, and again, whether it's us or another insurance coverage lawyer, they can help you with that, because the next step after you get a letter, if it's a denial letter or what's commonly called a reservation of rights letter, that's when you need to really do the deep dive into your policy and respond to that. And when you respond, you push back all these denials.
But if we haven't gotten a response, is it inappropriate to nevertheless modify if we looked, for example, at the broker's response? I should say the broker's claim.
Right.
Would it be inappropriate for us to modify that even if we have not yet heard a response from the carrier?
We could certainly do that. And what we would on simply, any voluntary actions that we took, but we have had direct impacts. Obviously, depending on where we are on the stage. So if it has been tendered, we would need to see the specific policies. But yes, you could do a supplemental tender, and that would be recommended for people who feel maybe they could have been a little more open in the manner in which they tendered that claim, right? Less specific.
Thank you.
And to your other question, Rich, about whether I have anything to add, it will just be an apology. These are tough times, and I apologize for the technological problems I had here. I'm hoping that this was of value to people. We really are understanding. We're in the people business too, and I would much rather be doing these meetings with everyone live in a room together, because that's just like your industry. That's how our industry works. But I do apologize, but we are here, and we'll do
Captain survived, Chris.
That's right.
My daughter's going to kill me if I don't get off my Zoom so she can attend class now. So
great. Well, thank you, everybody. Again, I sent via Zoom chat Chris and Rich's emails, contact information. You can always reach me, Mike Meller as well. And thank you. Please stay in touch and stay safe out there. Thank you.